Yo, what's up guys? Welcome to our channel. Today, we're diving into the essentials of the Indian stock market. It's like the Kumbh Mela of money, but instead of holy dips, you're taking a dip in profits, hopefully. If you're looking to understand the basics and get started with investing, you're in the right place. No more scratching your heads over Sensex, Nifty, or IPOs. We'll break it all down, simple and easy, just like your favorite YouTuber explains PUBG strategies. So, buckle up, grab your chai and Parle G, and let's get started on this roller coaster ride to financial freedom. What exactly is this stock market everyone keeps raving about? It's like a giant flea market, but instead of clothes, you're buying and selling pieces of companies, also known as shares. Imagine if you could own a tiny piece of your favorite samosa shop. That's what buying shares is like. You're investing in a company, hoping it'll grow and give you profits. The Indian stock market has two main exchanges, the Bombay Stock Exchange, BSE, and the National Stock Exchange, NSE. Imagine them as the Amazon and Flipkart of the stock market world. But remember, the stock market is a risky business. Prices go up and down, like your internet connection during a Zoom call. Educate yourself before investing your hard-earned money. So there you have it, a crash course on the Indian stock market. You know how every field has its own lingo? Like cricket has its Yorkers and Googlies, the stock market has its Sensex and Nifty. These aren't just fancy terms to throw around at parties. They're the barometers of the Indian stock market. Think of Sensex and Nifty as the Virat Kohli and Rohit Sharma of the stock market. They're the star players, the ones everyone watches closely. Sensex, short for Sensitivity Index, represents the top 30 companies listed on the Bombay Stock Exchange, BSE. It's like the A-team of the BSE. Nifty, on the other hand, stands for National Stock Exchange 50 and comprises the top 50 companies listed on the NSE. Consider it the dream team of the NSE. These indices give you a snapshot of how the overall market is performing. If Sensex and Nifty are going up, it generally means the market is bullish and investors are feeling optimistic. If they're going down, well, you guessed it, it's a bearish market and people are running for cover like they just saw a cockroach. But how are these magical numbers calculated? It's not like someone throws darts at a board with company names on it, though that would be fun to watch. Without getting into the nitty-gritty of market capitalization and weightage, let's just say it involves a complex formula that takes into account the performance of the companies in the index. Now, why should you care about Sensex and Nifty? Well, they're like the weather forecast for the stock market. By keeping an eye on these indices, you can gauge the market sentiment and make informed investment decisions. But remember, they're just indicators, not guarantees. So, there you have it. Sensex and Nifty demystified. They're not as intimidating as they sound, are they? Keep an eye on them, but don't let their every move dictate your investment strategy. Chapter 3. Demat Account, your gateway to the stock market. So, you're all fired up about investing in the stock market, huh? That's great! But before you start picking stocks like you're choosing toppings for your pizza, you need a demat account. Think of a demat account as your passport to the stock market. It's where your shares are held electronically, safe and sound. No more dealing with physical share certificates that can get lost, stolen, or eaten by termites. Opening a demat account is easier than ordering food online these days. Seriously, you can do it from the comfort of your pajamas while binge-watching your favorite show. First things first, you need to choose a depository participant, or DP. These are like the stock market's version of banks, authorized to open demat accounts. You'll find a whole bunch of them online, from traditional banks to discount brokers. Once you've chosen your DP, you'll need to fill out an account opening form. Don't worry, it's not as tedious as filling out your tax returns. You'll need to provide some basic KYC documents, like your PAN card, Aadhaar card, and bank statements. After you've submitted your documents, the DP will verify them, and voila! You'll have your very own Demat account, ready to be filled with shares of your favorite companies. Now, you might be wondering, how much does it cost to open a Demat account? Well, the good news is that most DPs offer free Demat accounts these days, or they might charge a nominal annual maintenance fee. But don't just go for the cheapest option. Do your research, compare the services offered by different DPs, and choose one that best suits your needs. So, what are you waiting for? Go ahead and open your Demat account today. It's the first step towards embarking on your stock market adventure. Chapter 4: Stock Market Investing 101. The basics you need to know. All right, folks. Now that you've got your Demat account sorted, it's time to dive into the nitty-gritty of stock market investing. Don't worry, I'm not going to bombard you with complex jargon and technical analysis charts. We'll keep it simple, like your grandma explaining how to make her signature biryani. First things first, what exactly are stocks? Imagine a company as a giant cake, and stocks are like tiny slices of that cake. When you buy a stock, you're essentially buying a small ownership stake in that company. Now, the price of a stock, like the price of onions, can fluctuate depending on various factors. When you buy a stock at a certain price and sell it later at a higher price, you make a profit. Well, it's not always that straightforward. The stock market is a volatile beast, and prices can go down as quickly as they go up. That's why it's crucial to have a solid investment strategy. Do your research, understand the company's business, analyze its financials, and then make an informed decision. Remember, investing in the stock market is a marathon, not a sprint. Be patient, stay invested for the long term, and ride out the market's ups and downs. Chapter 5: IPOs. Understanding the hype and the reality. You know how everyone loses their minds when a new iPhone launches? Well, the stock market has its version of an iPhone launch, and it's called an IPO, short for Initial Public Offering. In simple words, an IPO is like a company's grand debut party, where it invites the public to buy a piece of its pie for the first time. It's a way for companies to raise capital from the public to fuel their growth plans. Think of it like this. You've been running a successful samosa stall for years, and now you want to expand it into a chain of restaurants. You need money to do that, right? So, you decide to go public, offering shares of your company to the public through an IPO. Now, IPOs can be incredibly alluring. Everyone wants a piece of the next big thing, hoping to strike gold early on. But here's the catch. Not all IPOs are created equal. Just like some Bollywood movies are blockbusters while others tank at the box office, some IPOs turn out to be profitable investments, while others leave investors with nothing but regret. So how do you separate the wheat from the chaff? How do you identify an IPO that's worth investing in? Well, it all boils down to research and due diligence. Before you jump on the IPO bandwagon, take a closer look at the company's prospectus, which is like a detailed report card outlining its business model, financials, and future plans. Don't get swayed by the hype and media frenzy surrounding an IPO. Remember, it's your hard-earned money at stake. Invest only if you truly believe in the company's long-term prospects and are comfortable with the risks involved. And there you have it, a beginner's guide to the Indian stock market. We've covered everything from the basics to the buzzwords, so you can start your investing journey with confidence. Thanks for watching. If you found this video helpful, make sure to subscribe to our channel for more insights into the stock market. Don't forget to hit the bell icon to get notified whenever we post new content. Happy investing! May your portfolio be green and your profits soar higher than a Shah Rukh Khan movie collection.